CRO is set for a 2 to 3x explosion in the next few weeks and months based on Elliott Wave and Fibonacci. The price pattern is looking healthy, and I'm going to tell you why. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Where I only used to focus on currencies, but now exclusive on crypto. So let's dive straight in. So markets move in fives and threes. And what we see with CRO has had a very clean, pretty clean now. Now we're looking at it. Look at this. It's looking like a nice 5-wave sequence. Very clean to the upside. And I'm just going to draw this so we see it. So we're on the same page. And then we're going to do a few things over here. We had this nice move up, down. Then we had this explosive move for a wave 3. And wave 3s tend to be the most impulsive. And there's a clue. When wave 3s are the most impulsive, then wave 4, I mean, this was very impulsive. We got a deep wave 4, hasn't traded into the range of wave 1, which is one of the Elliott Wave 3 secret rules. By the way, if you want to learn the 3 key rules of how to do Elliott Waves, take my Fibonacci and Elliott Wave Masterclass. It's in the link below, and I cover this in a lot of depth. But now we are on the wave 5. It looks like a strong, clear wave 4. Now it's a question mark because it has not been confirmed yet. But we don't want to wait for the full movement because you can't make money with that. All you have to do is get the edge in your favor and look for what's likely to occur. So what I want to cover with CRO today is we've had a nice move to the upside. I'm just going to zoom in a bit over here, like so. What it looks like, there's a couple of different wave counts, but the most obvious one looks like we've got this initial wave 1, wave 2. We're potentially making a wave 3, 4, and then a 5. You go, what? Yeah. I go, yeah, the wave 5s tend to break down into a 5-wave sequence within itself. And even, I mean, could be this, either or is fine, but this is where we are looking. So what we've done over here, you'll notice that we got a green line, a red line, these particular lines. What this measures is something called Fibonacci ratios, and it measures human psychology, the emotions of fear and greed, because what Ralph Nelson Elliott figured out in the 1900s was the markets are driven by speculation on the psychological mood of people buying and selling. So it's very, very important, this part I'm going to cover with you here before we just finish up. Today's a short, sharp one. I want to just bring this to your attention. When you've got a decent, that's pretty clear wave 1, wave 2. This is a very obvious wave 3 in hindsight. But when we measure that wave 3, right, we're going to measure it. I'm going to measure wave 1, and I'm going to project it down here. And wave 3s are typically, more often than not, 1.618 to a 2.618. And you can see CRO smashed, like literally smashed past the 2.618 like it wasn't there. And then when you see this, if you're ever in a market and you experience, as in like you've bought down here somewhere and you experience this, and it hits 2.618 and then it keeps going, this is a clue that it's panic buying and it's overbought and the greed is really taking in and people are piling in. But the professionals, the people that are normally 2 steps ahead of the market that bought down here, they're getting ready to take some profits. And that's what drives the market back down. That's what you call a wave 4. Wave 4 is a typical traditional profit-taking wave, right? Profit-taking wave. So this 2.618 is a massive clue. So also, what's another clue for us, we want to take this into consideration, is momentum. There's a few different momentum indicators that allows you to see what's the rhythm of the market. Is it overbought? Is it oversold? Where is it? So one of the things that I like to do is go to a weekly chart. In the top left-hand corner is where I keep my weekly chart. I'm just looking at the momentum indicator. And you'll see that the blue line is over the red. And I just see it as an arrow. It's pointing up, meaning that the movement should be sideways to up. That's where the probability lies. And there's this great saying, the trend is your friend, ride it until its end, until it reaches its bend. And we want to go into the direction of the larger degree time frame. So previously we were looking at a daily chart. The larger degree time frame is a weekly chart. So this is saying up. Now, when that coincides with pattern, with what we're seeing over here, this ABC of a wave 4, which complies to the 3 key Elliott wave rules that you must know, that you absolutely must know, is key and crucial. Because if you know them, it gives you a massive edge. And then we've had this initial, what looks like a wave 1, a potential wave 2, and then there's a wave 3 of a wave 5 that tends to explode. And at the beginning, we said a potential 2 to 3x. And what we meant by that is today's price is what? Let's call it 40, 45 cents. And a 3x, this is the typical high probability wave 5 zone. And on the upper end, it's, what's this number over here? It's $1.34. So it's around a 3x. On the lower end, it's still around a 2.2, 2.3x thereabouts. And that's the range. And what you want to be very hyper aware of, like super aware of, is when wave 3 is the extended wave, is clearly the extended wave because it's over 2.618. If we do get all-time new highs, so this high gets exceeded, if it does get exceeded, we want to be really, really, really aware that this zone is likely to be the case. People are going to feel as if it will go on forever, like this. But what tends to happen after a wave 5 is a big ABC correction. Big ABC correction. But we don't need to speculate too much on that. Right now, it's paying attention that the weekly momentum is up. The daily momentum is overbought, so I would wait maybe for a pullback. But on a macro picture, we can see this clear pattern. Hopefully you can see it too. A 1, 2, a 3. Looks like a very clean wave 4. And the market's moving 5. So after a 4, we anticipate a 5, which normally breaks down into a 5-wave sequence in itself. And then if it does do that, this is not the time to buy up here. This is the time to be looking to take profits and get out of the market. If you're trading and speculating, if it's a long-term buy and hold, that's a whole different strategy, because I know many of you are staking your CRO, but it's good just to be aware of what's likely to happen. So if you want to learn how to do this, I've actually created something special for you. It's my Fibonacci and Elliott Wave Masterclass. It's in the link below, in the description box below, and I cover the 3 key rules that you must know with Elliott Wave and Fibonacci, and how to combine the two together so you can have the edge in the market, so you're 2 steps ahead as opposed to 2 steps behind. So if you like today's content, like, subscribe, hit the bell notification. I'm going to finish on a quote. We'll go with I think we'll go with chapter, let's have a look. Chapter 5. Leonardo da Vinci. Simplicity is the ultimate sophistication. So when you're reading markets, there's many tools. There's all types of things you can do. There's, I was going to say a trillion, but it's more like 1,000 different indicators. I like to keep it simple. I like to have a momentum indicator. My favorite is stochastics RSI. I like to read the price action. My favorite methodology for reading the price is Elliott waves, and that's what was in the masterclass. And then also how to read the price, the wave relationships, the psychological relationship, the buying and selling behavior, is to combine it with Fibonacci ratios. The simple one is Fibonacci retracements, but there's more advanced ones that you can add in, so you can see the relationship between a wave 1 and a wave 5, a wave 4 and a wave 5, and if they cluster, as you saw in that chart with CRO, it gives you a very high probability on what's likely to happen, so you can plan and prepare in advance, so you can anticipate as opposed to react. All right, like, subscribe, hit the bell notification. Hopefully I'll see you in one of my live workshops very soon. See you soon.